Focus. Ideate. Innovate. Enable.
With India's auto industry going through a rough patch, dealership business is also finding it difficult to keep up the pace of growth. Started as an initiative to recognize the true potential of dealers, FADA and Auto Monitor organized the 5th edition of Automotive Dealership Excellence in the country's capital. A benchmark in automotive retail, these awards recognize and reward the best in the business in India.
Keeping pace with the developments, a dealership today has evolved, and how? Also, the dealership today is not just a commercial hub, but with the environment-friendly activities and contribution to the society, today's dealerships have become beacons of the society. Like a leader holds a group together, FADA, the Federation of Automobile Dealers Association, binds the entire dealership community with a single knot. Founded in 1964, today FADA is an apex national body representing automobile dealers across India. I now request the president of FADA, Mr. Mohan Himatsingka, to say a few words.
It gives me great deal of pleasure and satisfaction that this activity, initiated jointly with Auto Monitor 5 years ago, is being carried forward with added zeal and zest. The number of applications for the award has been increasing, making it amply clear that the awards are getting and growing in popularity. We at FADA realize that to be successful in automobile dealership business, the employees, service, and sales satisfaction is extremely important. Apart from that, safety, CSR, and green initiatives have been given due weightage. While congratulating the winners, I hope that these awards will spearhead the movement for all-round excellence in auto retail industry. Thank you.
And joining us to discuss dealer satisfaction and elusive story were our experts. Mohan Himatsingka, President FADA. Sandeep Singh, Deputy Managing Director, Marketing, Toyota Kirloskar Motor. Praveen Shah, CEO, Automotive Division, Mahindra & Mahindra. Sumit Sani, MD and CEO, Renault India. Ravi Pisharodi, Executive Director, Commercial Vehicles, Tata Motors. Bernard Laike, Director General, CECRA, European Council for Motor Trade and Repair, Belgium. Anup Kumar Saha, General Manager, ICICI Bank.
Mr. Praveen Shah, the industry is going through such a turmoil. It's the vendors who are losing money, OEMs are losing money. So the feeling within the OEMs are the dealers being unnecessarily petulant?
I've been in this industry more than 20 years. I'm yet waiting for a day when I find the dealers are satisfied, good or bad times. They have the common issues across good or bad times.
Right.
So that's where the elusiveness stays. And I think we'll have to find solutions, working hand in hand, being transparent, and try and address the issues in best of the current situation and find a win-win solution.
The key point over there that Mr. Praveen Shah is making, Mr. Himatsingka, is the fact that good times or bad times, the issues that you raise year after year remain the same. Do you agree with that?
What happens sometime, like this is the time when the dealerships are not making money, the argument is that all the stakeholders are not making money. Neither the manufacturer, nor the dealers, nor the transporters. We can understand that. But when the opportunity for growth comes, say if a dealer starts selling 5 times the vehicle, then you start needing 2 or 3 more dealers in that territory.
Okay.
So, probably, while the manufacturer is growing, they probably do not allow the dealers to grow at the same speed or at the same pace. This is one of the concerns that was being asked by most of the dealers. So, you might be hedging your risk. If I have to take it in that way, okay, in one market, in one geography, you would not like to have dependence on one. then the dealership feels that then why to put only entire money in one basket?
Right, right.
So here is the confusion which has started prevailing in most of the dealers whom I had been interacting with.
Focus. Ideate. Innovate. Enable. Focus. Ideate. Innovate. Enable.
When an OEM gets into any kind of negotiation with the dealer, it's always from a position of strength. So in that, there is a sense that, that transparency gets lost when there is an unequal relationship in question.
That time has gone. Today, manufacturer, OEMs cannot afford to be non-transparent with dealers. They cannot afford to work like a principal, that I'm a principal, whatever I say, you follow me. I don't think we are working like that. Your question is valid that when the volume grows, manufacturer try to bring in more dealers. It's a valid question, but at the same time, if you look at from the manufacturer side, we do look at the capacity of the dealer, whether they can really do justice with the market, they can take care of customers, they are fully involved in the dealership. If they are involved and they are doing justice with the customer and with the market, we should certainly expand with them. And while taking this decision, we must build what we say consensus. We must speak to them, discuss with them, and that's what we follow in our organization, and that's what I think most of the organizations are doing.
Mr. Sawhney, the question of financial viability, however, we cannot ignore. In fact, recently a JD Power survey has clearly indicated that in 2013, over 50% of the dealers, FADA I think has about 8,000 members, and over 50% of those dealers will be making losses in the year 2013. So this clearly appears to be something systemically wrong. Would you agree with that?
Today, we have to look long term. There are three things. One is profit, which is very important for dealer satisfaction. Mm-hmm. Second is the growth. Mm. And the third is future. So dealer has to look these three things with the OEM. And what happens is, when profit goes down, actually that dealer delightment, what we expect, takes the name of dealer satisfaction, and all of a sudden we start feeling stressed. Our business is not trading business. At times we feel this is a trading business, this is not. And when we go out with a hunting mentality that this month or this quarter or this half I've not made money, I think that is one approach which has to be taken away, both at OEMs and dealers end. Hunting and farming has to go together.
Right. Let me take that to you then, Bernard. Share us the experience that you have had in Europe. You can clearly see the difference of opinion here between the dealers and the manufacturers. What is it like in EU?
Yes, I think the situation is more or less the same in Europe. When we have relations between dealers and manufacturers, I think that everything is a question of respect. Mm-hmm. And obviously the contracts are made by the manufacturers and are proposed to the dealers, but in fact in the reality, if we see the reality, the rules are imposed by the manufacturers. And of course, in some situations it works very good and there are not so many problems, and in other situations it's exactly the opposite. What I would like to say is that in Europe the situation, the economic situation is not good, even if the year 2013 is more or less stable in comparison with the year before. But exactly because of these difficult economic situations, all members, so the dealers, have to be respected. And at the moment, unfortunately, it's not the case.
But let me go to the lone banker on the panel. It said that you can afford to have a difference of opinion with everyone, but not with a banker. Never annoy a banker. So let me come to you, Mr. Saha. Because of the financial precariousness of the dealers, it then becomes a chicken and egg kind of a situation where they don't even get, if they get loans, that are also at a very high interest rate.
basic job of the banker, whether in good times or bad times, is what's the limit we set up, right? Sometimes if we set up more limits, there is a risk of the primary sales is more and secondary sales actually not happening. So dealer is unhappy that I have a higher inventory overhang, and end of the day, he's end up paying higher interest. At the same time, if I don't, there are times if I set up high, are there chances of dealer actually moving the money into something else? So I personally see good times or bad times as opportunity. We have seen it ourselves. One of the beauty of bad times is you look into a lot of underlying cost structures really. And really what you do is you make yourself more efficient. And by the time the growth really comes in, you are much more efficient than ever before. So I really don't think bad times are necessarily always bad, because in a business which are long, steady business, you will have good times and bad times. But bad times are really good times to prepare yourself for good times. So that's how I look at it.
That's an excellent point, Mr. Saha. Let me take that to you then, Mr. Praveen Shah. During a time of slowdown, what are the areas then that together the manufacturers and dealers can work towards?
I think in this time, my way of thinking, one of the big fixed costs, which is part and parcel of the dealer satisfaction survey, is inventory. I think if you can find the fact that actually in this time you can't estimate what would be the market demand, I think we'll have to figure that out. How does that work? We as an OEM. At the back end, actually, we must try and see that actually how do we strengthen actually and create a more reliable supply chain. And also at the same time, I think we reduce the complexities of doing business.
Mr. Peshawar, is it possible that one day manufacturers would allow their dealers to have perhaps competing brands being sold under the same roof?
I think that situation is very far away in India, because the way the relationship has developed is the products, the technology, the know-how, even the selling skills, the training, everything is being provided by the OEMs to the dealerships. But if you want to look at the multi-brand type of scenario, I would say even a lot of dealerships are not ready for that, because then the dealerships themselves would have to fend on their own quite a bit. And we're talking about it in a situation today when the real issue is the market downturn. If the market has contracted, and if a particular brand has 15 dealerships in the city, and by many more dealers having multi-brand, that brand will have 50 outlets in that city. If anything, the pressures on margins and competition will become worse. And given the cost of real estate in the major cities, each brand will demand more space.
Focus, ideate, innovate, enable. Focus, ideate, innovate, enable.
Time to take some of the questions that I have got. So, Mr. Sawhney, why don't you start? Well, it says manufacturers terminate dealerships at the whims and fancies of the marketing team, and that too without giving them any advance notice.
I don't think it's like that. And if I have to share an OEM's feeling with all of you, a relationship between an OEM and a dealer is just like a marriage. It is not for a few years or decades. Actually, it is for generations. And there are reasons, I'm not getting into specifics of why a dealer is being terminated, but we have been listening till now about growth, future, but at the same point of time, there is also a territorial responsibility which our dealer partners have, and there are various parameters of performance, and manufacturers do see that. So I won't agree to this point that it is because of whims and fancies, but I would truly support that there has to be transparency in the relationship. And as I said, a relationship is like husband and wife, so it has to have that kind of a transparency.
Mr. Peshawari, why don't you take this one? Unreasonable sales targets, okay, and because of which the incentives that should come to the dealers for all practical purposes is just not possible.
So I think the struggle is really in terms of forecasting. As far as I know, OEMs try to set a market in line with the expected demand in the month. And it becomes very difficult now to even talk of a annual target. Because when you start the year in April or May, you try to set an annual target based on historical data. That target looks ridiculous 3-4 months down the line. So actually, if you see either up or down, the last 5-6 years targets have become meaningless because they've always had to be corrected so that dealers could qualify for the annual performance bonus based on targets. But I think, I would say OEMs which want to keep this institution of dealer targets alive, they take some calls in the middle of the month or towards the end of the month to adjust those targets so that at least a large number of dealers are able to reach that. The problem in today's situation is it's very difficult to say what the outlook for February is going to be, but you need to set a target because that's how the system works. There is a target orientation, there's a push towards the end of the month, but I would believe OEMs take calls to adjust the targets based on market situation.
Bernard, the larger point also that the gentleman is trying to make is the fact that targets are also set unilaterally by perhaps the marketing team of this. So why don't you share your experience in that regard?
Dealers receive targets, although the economic situation is not so good. They receive sometimes targets very ambitious. So what we would like is, of course, that these sales targets would be really negotiated and not decided unilaterally by the manufacturers. And it has to be decided together with the dealers and why not with the dealer councils.
So let me get you also on this specific point, unreasonable sales targets. And how do you cope with it really?
Anyway, I'll say that yes, my dealer friends are very right in saying so. But the solution is visible. You see, if the market is shrinking, the target is higher. Initially, the annual target was much higher than the last year. And the sales has been shrinking. So in that situation, if the compromise could be that either of target or market share, whichever is achieved by the dealer, that should be acceptable. Because in a shrinking market, a higher target doesn't mean much. So here I'll suggest that you give two options. Either of the thing dealer should achieve, one, and in case dealer is not agreeing with the target, say the monthly target, and the question is that the marketing team arbitrarily fixes the target. Yes, if the dealer is feeling that this is an arbitrary target, dealer is feeling bad on that target, he should raise it. And when he raises it, this objection should go to the higher level. And if the higher level in the hierarchy of manufacturer does not respond, then dealer's version should become the target. Otherwise, what happens, the higher level will not like to respond. So, in this situation, give the benefit of the doubt to the person who is suffering more.
It says that there should be a buyback policy for the shared parts from the manufacturers as dealers get stuck up with parts of obsolete models.
It all depends on the scenario. If it is an amicable settlement, if dealer has abruptly decided to close the dealership and there is a stock, the attempt of the manufacturer should be if that can be diverted to another dealer, or if it can be sold in that area by another dealer. So there are many ways, but we must try to help that out. Okay. If the stock is stuck because of some other reason, very old, already shown as a retail to achieve incentive, already been registered in an organization, that vehicle has been sold, very difficult to work on that kind of stock. That is one part. As far as parts is concerned, I think if it is a mistake of manufacturer and parts, even if it is a mistake of dealer, I would say, if the parts are just fresh, they are not very old, they can be taken back, we should do that. But frankly speaking, in a corporate like this, the chances of those kind of mistakes are very minimal now. I would say even less than 0.5% and all that. We don't make those kind of mistakes. But if there is an opportunity with us to take that stock back and send it to another dealer or to keep it with us, we should do that. We have no reason not to do that.
Right, let's hope we move towards a more equal relationship. Thank you so much, gentlemen. Thank you so much, ladies and gentlemen, for being such a great audience. Thanks so much.